Hey, welcome back. It's Jason Walter here. I want to talk about a new report that was just announced today at the time of this video, and this is according to the Mortgage Bankers Association, or the MBA. It was just announced today at the time of this video, which is the 7th of September. They noted that mortgage applications decreased 0.8% from 1 week earlier, though. But as I noted right here, this is the fourth consecutive week declines in applications right now. And excluding this onset of pandemic or excluding the onset of COVID, we're at the lowest levels in decades. And this is for the week ending September 2nd of this year. So if you guys follow the channel, you guys all know this, but mortgage applications are broken up by refis plus home purchases. These are people submitting loan applications in order to buy a house or to refinance their mortgages. So they have what's called the refi index, which decreased 1% from the previous week, but was down 83% from 1 year ago, of course, because mortgage rates have increased over 3 percentage points in one single year. They also have what's called their unadjusted purchase index, which decreased 3% compared with the previous week, but was down 23% from 1 year ago. And by the way, the current levels for the amount of people submitting loan applications for home purchases are at the lowest levels since mid-November of 2016. In other words, nearly a 6-year low due to a strong pullback in home buying demand right now. So let me share that with you right now. This is according to the Mortgage News Daily, which provides a chart regarding their purchase index over time. So their index right now is at 197.8. Excluding the onset pandemic, which of course was April 2020, we're currently at the lowest levels since November 14th, 2016. And according to the MBA's chief economist, he had this to say. Mortgage rates moved higher over the course of last week as markets continue to reassess the prospects for the economy and, of course, for the path of monetary policy by the Fed. With a 30-year fixed rate rising to the highest levels since mid-June of this year, application volumes for both purchases and, of course, refis dropped. And recent economic data will likely prevent any significant decline in mortgage rates in the near term, but the strong job market depicted in the August data should support housing demand. So in regards to mortgage rates, let me give you an update regarding that. So here's according to the Mortgage News Daily, as of today, which again is the 7th of September, for people with exceptional credit, the average is at 6.12%. This is over 100 basis points more since August 1st, when rates averaged 5.05%. On top of that, 1 year ago, rates were at 2.97%. That's a 3.15 percentage point increase in one single year. Additionally, according to Investopedia.com, average rates are at 6.32%, again for people with exceptional credit. And because average mortgage rates have increased over 100 basis points since August of this year, this is one main reason, in my opinion, why we're seeing a pullback in home buying demand as of late. On top of that, according to the MBA here, they said there's no sign of a rebound in purchase applications just yet, but the robust job market and an increase of housing inventories should lead to an eventual increase in purchase activity. On top of this, other early indicators of our housing market is not just regarding purchase applications, because have a look at this, because this is pretty eye-opening here. This is according to showingtime.com, and they show total real estate showings across North America, at least for people who are using ShowingTime. But take a look at this, because this is pretty eye-opening here. The orange line right here is for 2022. This year, of course, the line right here is for 2021, and the line above there is for 2020. So take a look at this, because for the week ending September 6th of this year, we've had a 41.9% decrease in the number of home tours compared to the first week this year. This is pretty eye-opening, because last year we only saw a decrease by 1.8%. And in 2020, we saw a 29.3% increase. So one reason, of course, why we saw a decrease last week for home showings was due, of course, because of the holiday, Labor Day weekend. So this is entirely normal, as you can see over the past few years here, where we saw a decrease in home showings across North America. No big surprises here, but the current levels right now, down 41.9%, is far lower compared to the past couple of years. So that's number one. Number two, we're seeing a huge pullback in contracts being signed across the US as well. So according to the latest data we have from Redfin, which is for the 4 weeks ending August 28th, pending home sales, which again is when a home seller accepts an offer from a home buyer, went down 18.01% compared to the same time period in 2021. This is drastically different compared to the 4 weeks ending April 10th of this year, when we basically had the same number of pending home sales compared to 2021. Therefore, this decline in home showings across North America, and of course this dip regarding pending home sales, could be an early indication that home sales could remain at very low levels in the months to come. And then going back to this original report from the MBA here, I also want to touch on this quote here saying we're seeing an increase of housing inventories, because more recently we're seeing just the opposite of that. So have a look at this. This is according to altosresearch.com. They have a really good YouTube channel if you want to check them out. They post weekly housing market updates across the United States. Really good information if you want to check them out on YouTube. But take a look at this. This is inventory across the United States. And this is for the most recent data they have is for the 7 days ending September 2nd of this year. And as you can see right here, we're seeing this a softening or plateauing effect regarding housing inventory across the United States. And in fact, Altos Research actually reported that last week was the first week we've seen in many weeks here, or many months, where housing inventory actually decreased from the previous week. So what I'm getting at here is that we're not seeing this growth of housing inventory like we once did several months ago, because ever since really April, we saw active listing inventory increase greatly all the way until we hit basically August of this year when it started plateauing. This is also a similar trend that Redfin is reporting as well. So if you look on their website as well, this is on Redfin's housing market, or the Redfin's data center, Redfin's data center here. Active listing inventory has started to decrease over the past couple weeks now. So active listings, which of course is housing inventory, is only up 4.25% from the same time period last year. And this is drastically different compared to the 4 weeks ending August 7th, where we had a 6.91% increase from a year ago. And obviously this is drastically different compared to the middle of June of this year, when we had more or less the same number of active listings compared to 2021. And also drastically different compared to January 1st, where we had almost a 20% decrease of active listings. And like I mentioned in my previous videos here, one of the reasons why we're seeing this pullback of active listings, in other words, a decrease of active listings over the past week or so, is because we're not seeing enough people list their house for sale. So here's the latest trends we have for new listings. So new listings are down 16% from the same time period in 2021. In other words, we're not seeing enough people list their house for sale right now, and this is causing housing inventory to actually decrease as of late. Of course, it's very challenging to predict this housing market in the months to come. But if I had to guess, I would suspect that the number of new listings is going to continue to decline for the rest of the year. We may have some ups and downs, but overall, I believe that new listings are going to be decreasing, and this is going to cause a softening effect regarding housing inventory, where housing inventory, if new listings continue to decrease greatly, could cause housing inventory to decrease as well. And because of this, entering into 2023, we're going to be at very low levels, historically speaking, for housing inventory. So right now we're again up 4.25% from 2021, but we're far below levels in 2020 and also in 2019, for example. In 2019, we had just over 1.2 million houses for sale, and now we only have 846,000. But of course, this data can change, and I'll definitely keep you posted regarding the latest developments in our housing market. And lastly, going back to this report from the MBA here, approximately 30.7% of the applications for mortgages came from refinances. In other words, approximately 70% came from home purchases. And also, there's something interesting to note here as well. The share of refinance activity, again, at 30.7%. 1 year ago this time, that share was at 67% of total applications. So comment below with your biggest takeaways from today's video. Also, if you got any value in this video whatsoever, then please hit the like button. I greatly appreciate that. Hope you guys have an awesome day, and look forward to seeing you on the next video.